but I had to figure all that out by practicing and trying all these different account sizes. I don't know what's going on here, but it won't add. Oh, there it is, finally. So we can try the 100K account, but if this is 100K, I'll increase the size here to one lot. And so if you think about it, that's super small. It's 0.01 on a 10K. Okay, by being one lot in a sorry, 0.1. One lot in 100K is the same as a 0.1 on a 10K and a 0.01 on a 5K. So the reason I'm selling right now is because our is down. We're in a consolidation, and you can see it's dropping. It should go to here. It might bounce right here though and go up, or it might continue all the way down to here and enter the Ichimoku cloud here. Give me a second, I'm gonna get some water. All right, so in this account, I basically was a -5 last night because I took it from 100K up some and then down. Again, I don't not a good trader as far as like this kind of market, range markets, because once I give my confirmation that's going up, I'm loading for buys and then it goes down like that, and I lose big. So that's why build our sell position now. So I like to do it combo of zeros and twos, because as the market goes up and down, like volatility like this, my two TPs come basically pocket, right? Go up like this, and then the equity curve will fluctuate because the equity curve will go up, down, and then once you get that move, it'll go up. So like that. So you can see my zeros. I don't know why this thing is oh, it's over here. That's why. So careful value. Why is it not? Is there a way to auto size the columns? Because it's annoying me. Let's try this then. So I'm analytical, so that's why I have four charts. So what I have is a 1 minute regular, 5 minute Heikin Ashi, 15 Heikin Ashi, and an hour can't write. I can actually. And Heiken Nash is still just price action. It's not really an indicator. It's more of a moving average to between the last bar and the current one. And then just a way for me to gauge strength. So right now I'm in 8 lots out of 100, which is very small. It's light. And what I'm working on is staying lighter and reducing my drawdown. So right now let's change the starting position here. Started around what, 95,000? I'm just gonna estimate it. So I have a chart that I use to help me determine my goal. So if I start at 95,000 and I want to make 2%, 3%, I should be around 98 here. So 98 will give me 4%. And then let's check news. So we have some news coming up in an hour. Right now, we just passed some news, and I guess that's where we got this right here, major drop. But we pretty much should go in one direction for the next hour or so. Next news might reverse things. And I know a lot of you guys trade Euro USD, which if you want, then I can switch that. But disclaimer, right? If you lose, it's your fault. At no point am I giving you like trading advice, okay? I'm just showing you how I trade and the signals that I go off of, okay? So I usually trade just use the yen, but if you guys want, I can switch to Euro USD. Any takers on that, or what? Or do we stay? So John says start with yen or stay with yen. Okay. So what I'm looking for right now is because we've had this drop on the 1 hour, you can see we passed the last pivot and we're right at the doji here. So it could literally bounce right here. So what I have here is a 4 position. And what I'm gonna do is I'm gonna enter a hedge 4 to protect my profits. So this is the same as saying I just took profit on the drop The only thing is that the reason I take the buys right there is because I think it's gonna go up. Okay, so as it drops, I'm gonna counter trend and build a buy position because this is the first pullback kind of thing, right? And if it really loses, then I still have my sells on top. And what I didn't do is then, let's say it continues down, and market structure changes. Well, I X out on my buys that lost, and I then add on a sell position to continue down with my top sells profitable. So that's a hedge. This is a hedge to protect profits and not a hedge to stop bleeding. But the levels I'm looking for again are right here. This is a doji, and we're right at the cloud. And the next level would be right here, the next dojis, which is basically this one, which is in the cloud. Okay, in the Ichimoku, it's not really, again, not that great of a indicator. What it is just it's taking this action and projecting it here. Okay, so again, I only like price action indicators. I don't really like things like RSI. I've used it in the past, like RSI or CCI or stochastic, or ATR and stuff like that. But these things tend to fake me out. What I've liked the most is Heiken Ashi, because it's just price action, and it can gauge the strength of the market. So there you see I enter the buy hedge and it's winning. So I really was trying to add on to buy scalps. It's just that I was trying to explain what the heck I was doing. But now the whole point here is I secure my buys. So at worst case, my buys are break even. What is it? 144. 382, and then up some for the spread, so 0.4-ish. So see, if the market drops, continues to drop, then my buys are profitable. And this is where it should bounce. And this is where I wanted to use some buy scalps for take profits. But since I'm in a hedge, I'm going to leave it on and I'm going to wait for it, because if it comes down to here, 50%, and continues, then I'm going to sell. But if it bounces right here and breaks the trend, then it goes up. And then what I do then is secure my sell right here. And this one's actually really close, so I'm going to close out one of my sells. So as it goes up, I'm going to win, adding to the profits. Now, what I'm looking for is the turn. So this is right now in the inside bar, but the body average is still down. So it has not turned the 5 yet. Okay, so this is where it looks to be stalling. So I'm actually going to exit my buy to allow my sells to grow on the way down. So I'm going to scalp some sells. This is just a small trade here. Wobble it in kind of thing. And that might have been the last of it. So if the market breaks the trend, as far as that channel, here. And what you'll see is an inside candle where the body is here and then the next one is up. And then that invites reversal. It doesn't mean it will, it just means it's a possible reversal. And the reason I'm looking for it because we're right at the doji right here. So market moves doji to doji, you can turn. So it either will fight here, consolidate, and continue, or it will turn. So there it is. See, it's dropping still, sells. So I profit on the way up, and now I profit on the way down. And this is a continuation pattern right now on the 5. We have 1 minute. So right here, this is the 50 of the 50, but I would be in sells. And I add back to my sell scalps. There we go. And this time I do not put my hedge on because I think it will continue to drop based on this movement. Now this one is negating it, and it's staying right here. So then what happens is the next bar could be the inside candle. So it's like this, and then the next bar could be the inside candle. Okay. And then that's where it might reverse. And you got a little W going on. So my bottom cells here are at a loss. But is where I protect my profits. So I got 1, 2, 3, 4, 5, 6. So enter a hedge if the market continues up. Unfortunately, I didn't enter it well enough, and it's at a negative. But this is the inside candle that I was referring to. It has not turned the market though. It would turn the market right here, which is right here. So if market comes up to here, it hasn't turned. Still in the trend, but once it passes, this is your KPI right here. So for me, as far as analytical skills, it's really good. I can recognize where the market turns and things like that. It's just my execution. So there's a gap. So from the time you analyze something to the time you execute is a slight gap, is a delay, and sometimes your emotion clouds that. Okay. So and this right here was a protection. That if it continued up like this, I'll take off my buy hedge at profit. But if it goes down, I peel it off and I smack back on the sells at this level. But the reason why I'm not adding right now is this is a 50-50 zone because it's a doji. Okay, again, doji here right now. And if I zoom out, wow, there's not much you can see, but on the 15, then do this. So right now we're in a doji on the 5. If you look back to where prices is at, there's a doji right here too on the 15. See, this is where it last bounced, and doji here, doji here. So there you go. So there's the buy. That's profitable. And now I peel it off. And now I build that back into my sell position because I think it's still going to go down. Why? Because the hour gives me direction. Okay, so point I was saying is doji here, pivot here. See, pivot here, which is the same doji. So you got this zone right now. You guys see that? As far as where prices are reversing. Doji, doji. And so same thing here, dojis. So prices could continue down, right? But basically it's gonna fight for it. And right now the bias is down. So this is what I was talking about. It goes up and hasn't turned the market. Okay, it's just a doji like this. So see here, it went doji here, doji here. Didn't turn the market and continued. So if I had put back my hedge as far as a buy down here, I would have been in a better position. It's just that I thought it was based on this pattern being a continuation. I really thought we were going to drop to right here. But we're at the top of that candle, which is support. And here's the doji. All right, so now we have to break this channel to drop, which is the 50%. So I'm not adding right here, but I'm preparing that if it closes below, you should get a slight pullback, and then that's when I smack on some sells for a small high probability of this. Not so much to the pivot, because your probability drops like crazy. Like probability is high, like right here, and then it drops like this. Okay. So like from here to here, there's like highest probability, and then from here to here, it drops significantly, and then all the way to the pivot, it goes even less. Now we got two dojis, but this one's an inside candle and it's smaller. So what's likely to happen is you got a flag pennant structure here and still continuing down. If you see two dojis like this is when it could possibly reverse, like right here. But really this is the that 50-50 zone right here based on the body range. Surprised I'm not using the caddy. I don't like the caddy. Nothing against William there. The caddy is great for building as a gatherer. Okay, because you go and build your positions and you know it's a very much a counter trend. I'm a gatherer. I'm not that. I am a with trend and a sniper. Okay, so for me, using the caddy, I'm not very profitable. Like right now, you can see I'm in cells with trend. Okay, so for me to profit with the caddy, I would have been like, oh, I just great, I got 0.3. If I had built my cell right here, then I would have been profitable. But I rather do like the way I position my trade, it's more of a diamond, which is light here, normal here, heavy when it's confirmed. Basically, he'll be heavy scalps, and then I peel off again, come back to normal, come back to light. So the way I trade is just the same way that David talks about, which is he says light zone, heavy. Okay. So it's very interesting. It's just we're teaching the same things, but trading very differently. Yeah. So based on this move right now, more continuation up, but it hasn't broken this. So now with the wick here, more pressure down. And this is now where I add the cells, scalps. And David might say this is bad PTP, but it's based on timing. That if it follows through, this is going to be a very profitable trade. If it doesn't, then well, it loses, and I have to peel them off, take them off at a loss, fix it somewhere else. So the point here is when I enter it is what makes it a better PTP, because when it dropped here, I didn't enter. When it pulled back and gave me that confirmation is when I entered. So this right here is better PTP. It's not as bad PTP. This right here would have been bad PTP. Same price level, it's just the timing of it is what makes it better. And see, so I just got a quick profit so that if it doesn't come down to here, I can peel off some of these losing trades and fix now the way up. Because again, this is still in the doji range and it has not turned the market down or up. Yeah, this one was a 100K account. So I lost last night. Now you can see it bouncing. It's like the 50% of the 50%. Say here's a 50%, the previous one. And now it's coming down. We're up 50% of the last down. So right here, based on this pattern of 5, excuse me, it should continue down. It's just that you're at a risk. Basically on a 15, this is an inside candle. Okay, on the bodies, this candle right here, which means it could possibly turn. So that's why I'm light right here, because if you look, I have 6 out of 100 is light. If you scale it position size wise, 100 is my super heavy, 50%. This would be my heavy. 20% is my light. Okay, so I'm super light right now. I'm like really light somewhere in here. And this is your normal. So light, 20%. Normal, it's between that 20 to 50. 50% because that's your risk. You only want to risk half of your position size. And then super heavy is when you're maxed closer to 100%. Okay. So a couple of times I went max. It's just if I go max and you're out of options, and if you do it the wrong time, you also take max loss. So when you swing right here, it's very risky. Risk goes up exponentially. So right here, small risk. Here, decent size risk, and then here's where it gets riskier. This is like risk times 3 times or kind of thing. So you want to make sure that these are high probability trades and it plays out, but high probability is more like 60% of time wins. So you got 30 to 40% that loses. All right, so this should continue down right now based on this move. So now I add back some sell scalps. You guys might say this is bad PTP, but it's again, it's a timing. It should follow through as a high probability that you got like a cup a handle kind of pattern, like here's your cup. It might bounce again as a handle like that. Or if you want to do that huge, this is like your cup, and now this is your handle. So this was your huge cup over here. You can call it however you want, but based on the one, is going down right here, and it's a strong sell right there. So I'm using HA candles again to measure strength of a move. So there's a slight pullback, and then I add back to my cells, both zeros and twos. So the idea is, even though if this is going to break down, I want to pocket the change, and I also want to ride it. So that's why I have 2 positions right now. I have a 0 position here and a 0 here. So I have 1 layer, 2 layers. And it's never bad to take profit. That's why I have 2 TPs here. So this is tapping into my normal. So I have light here, light plus normal. And then the normal will come off as it TPs and reduces my exposure to the market. So if you guys see here, it's 15. So actually, I'm still light. So I could add more right here. What I'm talking about as far as normal positions. There you go. I touch on my normal. Yeah, Phoenix. I mean, all that RVO does as far as lots is the same thing as this right here, margin. So 11K is the same thing as 11 lots. Okay, and I'm on a 100K account. So again, 11 lots is still light. So I touched on my normal and I basically scalped it, TP'd it, and then so now I'm back to my light. So you always want to stay light because the market can swing, especially with UJ, it swings like crazy. So if you're light, you can survive the drawdown. And this is where it's like, I'm teaching what David says. It's just sometimes I don't execute it. But as the market drops right here, And see, this is a continuation pattern right now because your body is like this, is lower lows. So when I'm looking for trend, I don't say lower highs so much. I look for the lows. If it's a downtrend, I look for lower lows. And if it's an uptrend, I look for higher highs. So the moment that you go high, 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 and then it goes inside, this is your pullback. And I'm measuring it based on the last strong buy. Because if it goes down like this, you've broken it and it's likely to turn and do a range. All right, so there it is. And it could bounce again one more time. But if I see the bounce, then what I do is I hedge it. And I can also peel off these bottom lines. So that's a big bounce. And what could happen right here is a W. So it's plan A and plan B. Plan A is going down, plan B is going up, right? The opposing sides of the market. Now this could be an exhaustion bar. As long as it stays below the 50%, we're still going down. What it's doing right here is this bar that was a lower low is now an inside, like even. Okay, so if this holds, then it wants to turn the market because this next bar right here, right now, is an inside candle. It's here's your low and here's your. So this is where I don't add. This could be exhaustion and a double negation kind of thing. Like it goes up, goes down, and goes up, and this will win. So what I want to do right now is mitigate my risk, and basically I can peel off a layer like this. So I took off my bottom layer, and now I have 3 lots, and I'm going to protect my profits right here, which is the last strong sell on the 5. Now, the way I protect my profits is different from you guys because I'm using a hedge. Why? Because I've realized that when I exit the market, okay, sit back there. Kids, it comes and says, my elbow's hurting and everything, and once you kiss it, it's like, okay, stop hurting. It's like, so what I was saying, I protect with the opposing hedge. And again, I'm back to light. So you can see I basically built my position. I was light, and then go into normal for scalps to pocket the money, and then I'm back to light as far as position sizing. So this is the better trading, and this is what I've learned and evolved to. It's just I have to be more consistent because I still get into the mode where I smack on super heavy like this, the aggression side, and then I lost. That's what happened last night. I was super heavy at a loss. So this again is super risky here. Okay, and the reason I put it right here is because this is a 50%, and again, it's the last strong sell, which means it goes doji and wants to turn the market up. Okay, but if it never takes it, then my cells continue to grow. And what I was saying about exiting the market is that now I have to find the next entry. Because what happens if you're going up right here? Well, your buy entry sucks if you're going to buy here. So my buy stop is a better entry that I can at least profit right here. And if it comes and takes off like stops and comes back, this buy stop is quite profitable. Okay, and then once it drops back down to here, I still have my 250 or whatever. Okay, but just by doing this buy stop right here, I pocket in this small window, probably like $100, you know, which is not a lot out of 100K. But if the market continues up, then what I do is I take off my sales right there at slight profit or break even, and then I ride the buys up and I add to the buys so that when it comes up to here, so this is my light, my normal, and then I get back to my light. So the way I position my trades now, like I said, is more of a diamond. And I need the trends, the bigger moves to do that. So that's why I like UJ, because it has big enough swings that if I catch things correctly, it's very profitable. But again, when it's ranging market like this, I suck in those markets. But when it's trending market like this, lower lows, this is a trend market, I profit greatly. So based on this right now, this should go down, and I add back my cells for second layer. Because right now I'm bus route. If I'm gonna sell in 3 lots and ride the wave down, it's not very profitable. So I want to be in a normal size position, ride it down, and I'm making bigger profits. Okay. And you see on the 15 is a lower low, which is a continuation pattern for down. There is a risk though, because this is it's forming a wedge that it could still pop up. So again, I stayed light. See here, I'm only 7 lots out of 100. Once it breaks, especially once it goes a lower low right here, is when I can go more of a normal size or heavier size. But as long as it stays above this, this is a light zone. Hope you guys are getting better there as far as position size. I've had to learn a lot on that because I sucked at it. I was like heavy all the time. No, I'm learning to do the light, normal, heavy. Uh, it's like market doesn't move. Man, it's just so slow. So here I'm just wobbling because I have some 3 right here that's losing. So I added more on the top to make those winning. Like this. Just wicks down like this. This whole set is winning. And now I can peel off and reduce my risk and keep the better trades. Um, See, so then as it pulls back like this, well, if it doesn't follow through, I can then close this out to reduce my risk. And all of this is just about reducing risk, mitigating risk. Now, if it follows through, then it's like, okay, no problem. I just wait for the next opportunity to load up. No, I'm not using the caddy, David. As I explained earlier, caddy is a counter trend, and it's a gatherer approach. I'm not. I'm with the trend, and not so much the trend. Like this is uptrend, but the current move, with the current move, and I'm a sniper. So this caddy, as far as Williams caddy Talon is very much against my style. I'm more Khalid's ride the wave caddy, which I'm looking forward to when he finishes that. It's basically I'm light, and then as it goes down, you add, and then as it goes down, you add, you add, you add. But I don't want to be like top heavy in the sense that it's light and heavy on cells at the bottom. So the way I trade, light, normal, heavy, come back to normal, back to light. Okay, so right here, because there's 1, 2, this should be the cup and handle and should follow through. That's why I'm not putting on a buy hedge, but I will protect my profits with opposing hedge, which this time I move it down, again, to the last strong sell right there. And put it right at the pit. So at this spot, I'm not adding cells because that's bad TTP. But if it does pull back, then I can add some cells. Now, what could happen is it breaks like this, and then it pulls back, then I add the cells. It's the same price level right here. It's the timing of it that makes it a good placement of entry. So there you go. See, there's a pullback, and then I add to my cells again. And I just wobble it in. Now on a 5, this is a risk of an inside candle. But basically you have a wave here, 1, 2, 3. So what I suspect is you get one more for turns, which again, it's this move. Expect it one more like this before it turns. And if I don't see the follow through, kind of like this, the wicks, what I do is I just close off my bottom cells. Come on. And again, I'm protected because if the market turns up, I got my buy stop to protect my profits. Look at that. See the doji? So this is 1, 2, and then 3. This could be it. This could be the turn. So basically this doji area is holding. And what we're likely to see is that. There it is. It triggered my buy stop, which is my clue to now flip the buys. And build in a buy position. Why? Because it passed the strong sell, 2 candles. Okay, so that means there's enough buying pressure to push the market up. And we could be in a W because here, I mean, it hasn't broken the 50%, but based on the market not being able to drop here, uh, might turn up to here, which is right here. So yes, this is 50-50, but it's pausing. So the likelihood is it comes back a little bit because up. Now I'm staying in my cells because it could still drop. So buy is about the TP here. Come on. I'm just playing the structure, David, which is that if this pulls back, it'll come up to here. So these top cells are still okay. And I basically close them out at break even if the market continues up. But if it turns down and the cells are still in play, and I have my runner for the next drop. Okay. But at no point has my profit gone down. It's just been growing, growing, growing. So see, this is what I was talking about. This is continuing. It should come up. So I'm recycling, and this is where I go normal position because I'm light 11. So I go a little bit heavier at 20. Well, okay, still gives me a chance to add one more, 2 more. Okay, so what did I do there? I'm light here, normal here, and I'm back to light. So that's what I'm talking about as far as the position size. It's a risk mitigation. So you want to stay light. So Pete, man, I don't hear any commentary from you.
I may look smart, but that's it. I don't say anything smart.
All right, see the move? It's just that I can read the price action. Did I anticipate it? No, I just, because I protected my profits and the market triggered it, that's my clue that the market wants to go up. So TP, and then I'm adding now because it hasn't touched the price action or the action point. The action point is right here at the body. So again, I add to my position, and this time I stay a little bit less because the likelihood each time diminishes. So there are bigger pullbacks, so then I add. And there it goes. So right now, 96. Well, let's look at my goal. If I start at 95, I'm at 1%. And a lot of you guys quit at 1%, but I'm like, hey, you know what? I need like 2 or 3. So I'm looking for at least 90, 7 before I quit. So another 1,000. Okay, and again, I mitigate my risk. So what I'm looking for now is to close off the cells here if it continues. But on the 15, it has not turned the market, which means this is just a pullback, like a breather. But I'm looking for the inside candle right here. When the market goes inside, it wants to turn. And this could be just an exhaustion bar because this goes boop. And then the next thing you see drops. It's a strong buy, and this is not the time to buy. Not right here. This is bad PTP to buy. But since it's close to the TP here and it's wicking, I'm just gonna peel it off. So here I have, you can see, here's my hedge, which is now what I was talking about. I have like 100 something. Take it off. And now I'm perfectly balanced. And look at that. I have float 200 bucks. So I don't care if the market goes up. Okay, now that it is going up, what do? I peel off my cells and let my buys grow. And what I do instead, because this is now unprotected profits, I put back my hedge. So if the market drops right here, I profit. And this is the same thing as saying TPs or stop loss. It's just a different form of it. And I lowered it because basically it's half. So I want it to be below half. There we go. So that's a better entry. I don't want it to wicket me in and then continue up. But now you see what's happening here on the 15. This is it's turn the market. This right here, right now, is a continuation pattern. You can wick down, but if the body stays above this area, then it's going up. What I'll do is then I'll build into my buy position, add my second layer of buys. I'm basically building towards a normal size position. Okay. And the wicks or the targets are below these pivots, which is a great target. Okay. This is an even better target, which is where I think the market's going. So right now I'm 8, so I'm light. This is bus route. So it's like I'm gonna add towards 10 or 15 or 20, because that's normal size position. Here's 15. You could pull back. So add heavier there. Yeah, 1, 2, 3 for the 0 TPs. So now I'm at my normal size position. So you guys see how I executed there? I went light, normal, light, and I'm going for normal, light. So I'm basically building positions. So this again is not a caddy as far as a counter trend trading. This is not counter trend trading. This is with the trend because my targets are above the break. You see, Sean would wait for the pullback and put the targets below the current. So for Sean, he's probably selling right now. If you guys are using the Talon, this is a great place to be adding sell because you're the 1 hour is still down, and so you can build a sell position like this and profit either here or here. You know, because if this is the last move, this is the 50% where it could turn. So if you were in selling, well, if the market turn right here, then you're great, but the risk is it goes all the way up to here. So that's why it's better to start right here and go for this, saying, hey, look, it ranged right there, market might bounce. But again, I'm not a counter trend trader, so I'm buying into this. Again, it's about to hit my TPs, and what I do, I move up my sell stop to the last strong candle, which is right here. Strong buy, that is. And again, the better one would be this one. It's just that's where my zeros are, so that's why I moved it here, because most likely it's going to continue, and then I can then move it to below this pivot right here. So there we go. I'm basically at my goal of 2% is 96,900. So that here, 2% is 96.9K. But for me, I'm greedy and I'm like, oh, well, I had a 5% loss. So let me go 3 to 4%, which let's get it back to 98. I'm trading what the market gives me. Now, one thing I can do right here is I can take off my TPs at the action point here. You can see it's wicking right at the action point. And instead of waiting for it to drop, I'm going to I have 1, 2, 3, 4, 5 buys on it. I'm going to hedge it at the best price. This is like the same thing as doing a TP. And I take off my opposing hedge. And the reason why is because it reached the action point and it should bounce back like that. So I can take off the top layer here to allow my sell to profit and leave my bottom runner. Because if the market does turn up, this is a great runner right here. 3 lots, which is not big at all. It's a very light position. So I'm going to sell scalp this. Getting into a sell position. So the expected is it should come down to here. Now it can go all the way to here and come down. And again, I don't really care because I'm profiting on the buys. And now I'm just building the next position, wobbling into it. And you guys also know why I start selling there? Pivot, pivot, dojis. So resistance, resistance, resistance. Make sense? It's just supplying or support and resistance. So I'm only doing sell scalps because I don't think the market's turning down. At least not right here. But it could. So who knows? So let's just add some zero TPs in case it goes down and continues down. So it might go down like this and then up and then down. Because again, the hour has not turned. I'm gonna run to the restroom real quick. Nice. Look at that. Now I take off my buys. Come on. And I let my cells run because this is a major rejection here. And
I was in buys from way up here and building, going down, building,
uh-huh.
and I closed everything out here
Good job.
with 1% of profit.
Nice.
Okay. That's the other counterpart of you.
Yeah, the counter side. Yeah.
It's
Vegas
just
will be like, oh, I don't trust the vertical move, and he would be buying into this.
yeah, but I mean it's this good example of how you see the market and the different people that you can earn money while buying and also by selling. So
This is both ways. You can do both ways, right? Like
yeah,
for me, I see that this is a rejection and it drops. So I'm building a sell position with a pullback. Whereas David will be countering it. Now, the better execution there actually would have been I put on my hedge. So when here is sold, I put on my buy hedge here and on profit. And in that case, I would have been buying up to here and then selling back. It's just that when you leave the market and then you come back, and it takes time to come into the, oh, what the heck was I supposed to be doing? Because if this candle rejects, then it can go up, and it's one of those weird W's. But right now, based on this being a doji down, with 15 seconds left, it should come down. The only thing I didn't like though is the body is still inside. If the doji had a body down like this, more like this right here, that would have been better for the cells. And there's the follow through in the cells. So there we go. So now I want to go to a normal position, which I am already at, right? It's just that I'm normal down here. So I actually need to go a little bit heavier in the middle to pay for the bottom cells. In case all it does is this. So I always want to position it like this. That's how I position with the trend. So unfortunately right now I'm a little heavy here because I thought it would go all the way here. So I was like, pull back, come, and it didn't, it stopped. It stopped right here at the support, which if you look, it's also a doji right here, doji here. So again, what I'm obligated to do is go a bit heavier here to fix trades. And I'm not at any point going so heavy that I can't, that I'm out of options, right? I'm only 26, which again is still normal because my heavy is 50. So there we go. See, now all these trades are profitable that could pay for these bottom losses. And so if this wicks up, I close these losses with a bulk operation with this. Okay, but this is continuation down so far. So I'm going to hold because it could TP. But it's wicking right here, which I don't like. Flickering should continue down though, so that's why I'm holding. But if this next candle negates, then that's where it's like, the down move has stopped. So what I'm looking for is this candle right here, the last one. If it flickers, it goes down like this, and it flickers, it's still a lower highs. Okay, but it's stronger when you have lower lows. The lower lows is much stronger for a down move. So even if you have lower highs, but your lows are inside, it could turn. See, so right here, because of this wicking, and it's going up some, well, I can peel off my losses. Because I already had some profits. Okay, so I profited from the heavier trades. And then again, I just peel these off to mitigate. And then I take my bigger profits and I'm at my goal. 97. Wow, that's still 2%. So now I just watch. Okay, I can protect my, oops, wrong size there. Protect my profits with the buy stop. And you see it's right at the last strong sell. I'm gonna move it up a little bit like that. But right now this is a flag pattern. Pin it. It should drop. And the trades that I did lose some, well, it's okay. I'll pay for it when the market is clear. Because right now the market is in a 50-50 zone. Excuse me.
Bless you.
There's a follow through. So I add back my sells. And again, why did I exit earlier? It's more of an obligation to exit because I was heavier. I wasn't that heavy, but it's just risk management that I can pay for it. Because what happens if it turned, right? I would have been in a very bad position, which is why I exited. Right now I'm fairly light. There's still light position, right? Less than 10. Just wobbling in this small zone right here. Right here. Just wobbling. So the idea is it goes, drop, consolidates, drop. So I'm just selling at the top, building a sell position. Now for you guys, if you want to use the Talon, start buying right here is a great one because most likely bounce. It is a ride the wave down. It's just you can wait and get a better one right here in the middle.
If you measure the distance between where the price is now and and that action point on the bottom, if you get like 20 pips of difference, that now is the best way to the perfect spot to start tailing on buying, because it will build up to probably level 4, level 5, and that's where you get most of the money when it bounces.
Yep.
And don't get scared if you go to level 6 or 7.
Make sure your price cycle is correct though.
That is correct.
So if you want to play safer, you use a bigger price cycle. And there it is. There's the follow through. Okay, and basically the loss that I took, I paid for it. And now I can add more heavily because it's falling through. Okay, so I added some zeros. So 1, 2, 3s, and then I add now on scalps heavier for the normal position. I'm looking to add until I hit 20. All right, so the idea again is how I target and is light, normal, right? And back to light. So I want to stay on the light and normal side because I haven't had an area with high probability yet. Because this is doji area, which is not high probability. Okay, it's just that the current bias is that it's doing this. So there's a higher probability, you know, like 5 or something for cells versus the box. So when it's higher probability, you know, normal size. When it's like super high, highest probability or something, that's when I go heavy. So let's say right here, when it's breaking, this would have been the highest probability right here. You know, broken, comes back, break. See, the highest probability of the wave. But this time around, you know, this is at the bottom, so it's not high probability. It's higher, just not high probability. Does that make sense? Hopefully I'm not confusing you guys. Okay, so I had one of my trades, TP, so add it back. You can see it forming a triangle. There it is. All right. So you got a little consolidation right here. Again, just wobbling. So here I can, well, meant to add at the top there. By the time I added, it dropped. So that was not supposed to be bad PTP at the drop. It's just from here to drawing to moving the mouse, it went too fast. That's what's called a slippage. And again, now I'm back to lighter position. You see here, I was like 20 and now I'm back to 12. So on my scale, right, heavy being 50, 20 is light. That basically touched on the normal. I mean, the normal right here is normal. 20 to 50 is normal. Now I'm back to kind of the middle light. I want to TP it and go lighter to hedge. I don't want to hedge too big the position. The reason I hedge though is because I'm giving a buffer for my next entries or next set of executions. So almost to my goal of 3. 3% is 97.8. 3%. Okay, so still consolidating here. So I'm gonna still wobble, and then that was more of a test trade. As it pulls back a little bit more, there we go. Better TPs right there because it's above the body. Go back into a normal position size. 20 right there. Ooh, look at that! Wow, exhaustion bar or something. So it triggered my buy stop. So I need to exit buy while it's profitable. Stupid MetaTrader is not executing. Come on. William, do you know why it won't execute? Like many times I'm trying to close and it doesn't close. And so I took a loss right there, but
It's I think it's that demo server. I don't know if they block something when there's too rapid movement. I don't know, but I
Probably.
never use that medical demo server. I try to use a broker because they got different rules.
it's just
Hey, Duke.
frustrating because I was executing at profit and I took a loss on it. And it's just,
Hey,
Yeah.
dude, that jump right there was the Michigan consumer sentiment that hit at 8 o'clock.
I forgot about the news. We did say the news was around this time, right? It's okay. We'll make it back. Almost to my goal there of 3%.
You know that if you put Talon on one of your chart, it could at least give you the daily profits in percent. You don't have to use it.
Nice. Well, I didn't like it because it was auto closing my trades.
Ah,
That's why I removed it.
okay.
Especially when you're in that drawdown.
Oh, yeah.
Oh, I was like, what the heck? Put it on. Put it on.
Yeah, that's right.
All right. See, nice chunk of change right there. And then basically reaching my goal. You see the equity, 97.7. So just a little bit more. And I went a little bit heavier. And again, I never went heavy in the session, being 50%, right? I was staying in the normal size. So that was something that was a huge aha moment for me, basically, because I previously thought I had to go heavy to make, my 1-2 major percentages. But what I found is that when I was heavy, I lost more because when they went wrong. But if I stayed light and normal, I made my, 3 to 5 percentages with more ease, less pain, less stress. And when the opportunity presents itself, then I love those high probability trades. They just don't come often. They come very, very rare, I guess. I mean, you have them, like, let's say right here, high probability, or right here on the break. This is your probability here. But if you look at how many trades were high probability, well, let's analyze the market real quick. First off, I would say right here, when you flat right there, and then this broke. Basically, you see it broke and then it came back up. So this right here is one high probability, like 80 kind of percent. Because of the break, oops. You could also say this one is another one for some scalps. It might continue, but for some scalps, this was one. And again, this one, if you caught this with a high probability on buys, it's just hard. So this one would have been it for the bounce right there. So the 1, 2, 3 right here. So like time 1, 2, 3, 4.
No. Sí. Sí, no, está bien, apaga.
What's that, William?
No, I was talking to my wife. Don't worry.
Okay.
And in Spanish, sorry.
All right. So here, see, banked it. Now I'm in a 1, 2, 3, 4, 5, 6, 7, basically 11, right? What I can do now is I can start peeling it off. Wow, I actually think I exceeded my goal, 98.
Secure your trade, secure your trade.
Yeah. Give me a second. Sorting my profits. I take off the lower profits. It's secured differently. So I want to close until 5. There we go. So now 5 lots. And this is where I don't really want to secure at this moment. With a market, I want to secure like this. In case it pops, but this is too close. So I'm putting it behind the last. Okay, and I'll move it down as the market drops. So this again is a high probability zone right here for drop. So I'm actually going to go heavier with 2 TPs. This is one of those rare high probability areas that I love. So there's my normal size position, and I'm gonna touch into my heavy here. So this is the first time you guys see me hit a heavy. And I think I maxed. It won't let me add more. Yeah, it won't let me add more. So you guys know why this is a high probability zone? Anyone see the pattern? You have a 0, 1, 2, 3. So it dropped. This might be a 2 though, is the only problem. But basically when you break, comes back in, drops. That's why it's a high probability. And it has to hold below this one though. If you count the buys though, like this could be 2 and it could turn up. I was counting it based on 3. If it's a 3, then this is high probability for sells. It's ride the wave down. So you can see me touching into heavy 44. And I'm just risking profits because I basically hit the goal, which is 3% here, realized, and this is like 2%. So I'm risking 0.5%. So if it doesn't play out, I have to get out, which means when it comes up to that buy stop, I have to close out on my positions as far as sells. What do you guys think? Turning down again? Looks like it on the 1. The 5 is still a strong sell because this is the last 5 right here. See, there it is. HP starting to execute. It only executed 1 though, so not yet. And woo, look at that. And some more. So it should follow through. So I'm going to add back and recycle my HP trades. And voila, I'm at 4%. And this is where it's like, you know what? I could close out, but I'd rather just secure the trade, right? Like, so basically I would move my buy stop or buy stop down and secure more of my profits. All right, so the HP trade is basically almost over. The longer it holds, the less likely it is to follow through. But right now it's still going down like this. But it hasn't broken down, which means it could reverse right here. So if you guys are in buys, this is a great shot for this. Gotta move. Because look what happens We've entered the cloud, which is where it usually bounces, or it goes a little bit deeper in the cloud. So if you're using Talon and start buying right here, this is a great area. All right, so now I'm obligated to close out my bottom buys or sells, I mean, to reduce my risk. There we go. So 1, 2, 3, 4, 5, 6. So close out that one, and I secured my trades. And I'm securing based on the last 1 minute, and also because it's above the break. But I'm not going to add anymore because, again, this is the high probability is left. This was it because it would retouch and dropped. You could have an ankle slapper here and it just, because I've done it before where I'll be like, yeah, it comes back to here. I'm going to add to the cells. And I'm like, oh, add PTP on cells. So I've learned my lesson, and that's why I'm light. And what I have here is secure trades. And since I'm 98.84%, well, let's look to gain back. And I would have to actually have 6% because I lost 5. I need 6 to get back to account break even. Okay. But you can see why I can swing minus 5% because I can make it back in 1 to 2 sessions. Not days, but sessions. Okay. Hopefully you guys are learning, and if you would unmute, share, what you're getting out of it, any aha moments. And just side note, normally I would close right here and I'm done. But we have another hour, so I don't know what to do with you guys. I could close this and trade a different account. But based on this move right here, I'm gonna secure more of my profits. It's a tight stop.
Well, you could ask someone if want to be on a hot seat.
On the Friday craziness. On a holiday weekend.
Oh,
William, I volunteer you.
I'm done. I did my 1% today. I did the cut and on 2 SIM account. One I did 0.95 and the other one was 129.
Good job.
So let's say totally it's almost 3%.
All right. Then who's brave enough to lose money? Joseph, how about you? John, allow some of the pilot seat folks to take the hot seat. Well, all you can do right now is just wait for the drift and see the profits grow.
Yeah.
But do you guys see how I changed my style? Because previously I was heavy all the time. But now I do that kind of like the diamond. I load up heavier for the middle ranges, and then I peel them off, peel them off, peel them off. Okay, so right in here, this was the only HP area, so that's why it was heavy. And I wasn't super heavy where I ran out of options, because my super heavy would have been 100. I was heavy around right here, 44. Okay. And everywhere else I was light and normal. Just grow, 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 grow.
Well, see if you can do $1,000 again, and you will break even on 100.
You mean get back to 100 air?
Yeah, you're almost there.
Yeah.
On the
6%. All right. It's just right now the market is not giving me that chance.
Yeah, I know.
The volume is dropped.
Yeah, that's right.
It has to drop to here for me to make that. It's about to enter my buy stop, which means it wants to be an ankle slapper here and come up. It has to break this channel though. See that? And my buy stop is right above it. The moment it comes there and breaks, the drop is done. This right now, in the past, I would get faked out and I'd be adding sells to this, thinking, oh, it's going to continue. Reverses. It's a doji. So you see that? Still buys, buys, buys. And what's not good is this, the way you can read it. If you look at these bodies, big, bigger, bigger, smaller. Okay. It invites the inside candle next. And then you have the reversal. Okay. So the way you can read Heiken Ashi is it typically moves in this pattern of what I call an S curve. Because your body, it's like small, bigger, 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 smaller, smaller, smaller inside candle. And it can continue. And usually it does two waves. Sometimes it does two waves like this, bigger, bigger, bigger. And then it usually turns up at least one price cycle. And then it might do it again. Okay. So if you count right here, 1, 2, 3, pulls back. This is what Khalid study did, right? 3 price cycles, 3 moves down, 1 up.
The buy stop is triggered. Just to let you know.
Yeah, you see, this is that inside candle I was talking about. So that means we're not going down anymore. We are. I wouldn't sell here. I wouldn't buy here. I'm just watching the market because, again, it's based on how you count it. If this is 3, then we're dropping because it hasn't turned the market yet. But if this is a number 2, then we're going back up, and this is just a fake out. Okay. But the whole point is I have 4% locked, floated. So again, this is 50-50. It's turning down. So once this body closes, 50% is when I know. If it is, then it's an HP trade it would load heavier for the cell. But it has to come down. The only thing though is it's HP when it crosses this and comes back up. Like that. Because it's not HP, because it could be double bottom, comes back like this, boom, W. But if there's enough selling pressure to close and stay below, then this is your HP zone for another ride the way down. Because you got, one, and then you got two. So right now, it's not passing this 50%, which is more likely to go up now. So you got this little channel right here, it's breaking, but the higher channel has not, and it has to break this right here. So when it comes up to here is when it's breaking. You guys see the up? So what I'm doing now is I'm gonna wait for this. And when it does, I close off my sell, profit, and I start adding to buys. And doing a, normal. Now, if I think it's gonna continue dropping, then I would hold my sells. It's just that this is an uptrend and this is at the cloud. We can bounce. That's why I'm going to close my sells at profit and build for the buys. Does that make sense, guys? Just all right. So now this is going down again. It's just a doji. So again, has to break this 50%, which means the buy stop can lose, and I have to peel it off and pay for it with additional sales. But I'm holding until, like I said, it breaks this pivot. It hasn't turned the market yet. There it is. It's holding, but you got 40 seconds. You see that? It's rejecting, wicking. So this is where I previously would get faked out. I'm like, oh, it's going down. And then the next thing you know, it goes up. So your first clue is that this is an inside candle. What you have, if you have two inside candles, it usually turns up. So it has not broken that level as far as the body. The one I'm just watching right now will float at profits. So it doesn't matter that I'm losing here. These are winning. So I'm waiting for this area to break. This is 50-50. If it breaks below, we're going down. It breaks above, we're going up. In this area, you can wobble, but I suck at wobbling. So I don't wobble. Anybody have some jokes or any plans for the fun plans, I guess, for July 4th holiday? Coming back up. Buys right now is down because it didn't break 50%. All right. I'm waiting for it to close though, because this could be the fake out. All right. So this one, I'm gonna do a high probability trade coming back to the break, and I'm gonna peel off my buy stop when it comes back. It's the first break, that's why. So this is one of David's HP trades. It is. Then I close out my buy stop, and now I smack on the high probability on the sell side. Waiting though, because sometimes it goes deeper, pull back, and wobbling it. Build a layer here, 0 TPs. So you guys see I'm heavy because it's an HP trade. So technically I could have been heavy on the buys too. I didn't know where it was gonna stop. So I should be getting out of my heavies and going back to norms here. And since it's touching it, I can peel them off, not just wait for the TPs. Actually, already executed. So now you can see I'm back to light. So I'm done as far as that stuff. And then now I add back my hedge. And I only hedge 5, but I would have to peel these bottom layers off. Well, so 1, 2, 3, 4, 5. Then 1, 2, 3, 4, 5 to peel off. Slight profit or slight loss. Could be that ankle slapper break. Because we're still right at the doji area. It just has not broken this. If anything, it's like I can mitigate my risk by peeling off this bottom layer right here. Right now, this is saying it wants to push up. So I'd rather just close this out. Slight loss basically, but it's okay because I had HP trades on that paid for it. So I made an extra, 200 bucks there. So like 3.9 right here, realized. And then hovering 4.1, I think, 4.2. Got that little channel here. What do you guys think? Is it gonna go up or down? On a Friday market, in a holiday market, I think it's gonna go down. Look at that though. It almost triggered my buy stop. And technically, it's a little too close. Yeah, I want it above the strong sell. Right now, this is going down. So once it closes below this 50%, I'll add some sells to pay for the losses I took off, but lighter, normal. The HP is gone. See, it hasn't closed below. The body, see, and there it is. We're going back up. So on the 5, it's turned. Could be exhaustion bar though. Okay. So what I want to do though, I'm just waiting it out. So this should be a high probability for sells as an exhaustion bar, 2 TPs. Look at that, doesn't even come back. Whoops. I meant to close profitable, not close sales. It's okay. It's gonna take off my buys, and I think it's gonna drop some here. So the target right here is good, because above. See, this is where the last broke. Pivot, pivot, pivot. That's why I have the sales scalps here. But if you guys look, I'm almost back to, well, I guess 99, right? Which is 4.5-ish. Wow, that shot up. So at the action point here, I'm adding. Took off the buys too early there. Was there news right here? Or I didn't see anything. Oh, great. There was a CAD news. Sheesh. CAD news moves the US. I didn't think CAD news would influence that much. It was orange though, but this right here is CAD news. Darn those Canadians. It should come down all the way 50%. This is where I add a little bit heavier to get the 50% right there above the pivot. And then I can exit out here or watch. If it's flickering, it should continue down. If it and you see a net profit, come on, holding right now. And I'm going to close here at all profit. So I'm 600 away from getting back to count break even. But this is where 50-50, it can continue downs or it can turn up. And based on the 5, it's turned up. It's a strong buy right here. And this has turned doji. So most likely, this is it. I rather build into my buy position now. Some buy scalps, but light. You guys know why? At the
I
pivot.
don't think it was Canada news. I think it's something the Supreme Court is announcing about student loan debt forgiveness.
Well, it was definitely the same time though, so
A bit. The Canada was like 11 minutes ago.
yeah, sometimes there's a delay. I don't know.
And I don't think Canada news like that would cause, you're right, it wouldn't cause such a huge effect.
Well, the last time we
We'll
said
see.
that,
We'll
and it caused a huge effect on Euro USD.
What's that?
The last time we said Canada news wouldn't do anything, and Euro USD moved
When was that?
when we were trading with David.
When was that?
I don't know. There's like a few
I-
weeks ago.
Yeah, sometimes two things can happen at the same time.
Exactly.
Just
In this case, it's like
sometimes.
maybe the combo.
Yeah, and that too. You could have two things pulling in the same direction.
Yep.
We'll see.
Basically, you have a W right here on the on 1. So this is what I've seen is for the retest if the W holds, because here's your W comes back 50% and it's like your flag and then boom goes up. So you got your like this. So that's why I'm building into buy position right now. So I got some 0 TPs here plus some scalps, and on my scalps I think this is a stop. Right now I'm on a heavy, still on the light side, but what I want to build towards is a normal position like this. So this is light. So normal is like this, and light is like this to carry all the way through. So again, I'm light here. I'm gonna be normal here, light again back to the top, and still light up here. And if it goes all the way, it's like it doesn't matter because I'm light and a good chunk of change, you know, plus 1%. And then it's like back to account break even. Okay. But right now this drop has not stopped. These wicking right here is a good sign though, that this could be it, because this is the pivot. It's the pivot. Pivot. Okay. And it's also doji, errors, doji, doji. So wherever you see these dojis is where prices could really fight it back. So it's this range right here. It's one small range. Okay, so I'm just gonna keep adding to the buys as it drops, and combo of 0 TPs and 2. So I'm looking at my position size. I want to stay under 20. And once it confirms, I can go a little bit heavier, more than 20. So the 1 minute that closes green, so that's why I added a little bit more. here. And the drop is pretty much stopped. It's your 3-bar reversal pattern right now. It's building. There it is. So I'm light, normal in this zone, and then get out kind of thing, peeling off. And once this candle closes, it follows through. Then I go a little bit heavier. But right now it's not closing, it's not stopping, it's still just pausing and going down. Because you can see it on the 5 there. Bad inside candle. And I doubt this will turn all the way down because it hit back into the zone, into this range right here. When it goes back into the range like that, it usually stays in that range. So put this back to light. Again, I'm normal. I'm approaching on my normal size position right here. 17. What's on the bottom I like, so I'm gonna add a little bit more here for the 3-bar reversal. Bam, like that. TP. So now this is where I go a little bit heavier for high probability in the small window. And really because it's taking my profits, I'm staying in a normal position. 23 here. I haven't gone so heavy. And there it is. See that? I just got back to account break even. I started at 1,000, recovered. And now I'm just floating the profits. I could add right here, but it's risky because this is the 50% of the 50%. So not the best place to add. You know, I took my higher probability right here. If I was a little bit faster, I could have made more. You see, it's bouncing down some. And then it's like, well, I can just peel off the trades. And basically call it done. Because it's almost at the 10 anyway. So with that, I'm gonna close off. And back to count break even. So hopefully you guys learned a lot. Recovered in one session. See, and it's like, oh, okay, well, didn't exactly make any money because I started at 100K. But I didn't lose any. Is the whole point. I mitigated my losses. Right. Oops. Screenshot. All right, with that, happy 4th of July holiday weekend. And, take care.
Hey, thanks, Duke. Have a great 4th.